Hey everyone, it's Matt here. Welcome back to another episode of Savant's Tech Talk. No one is sure what the future holds, and given that uncertainty, the stock and equity markets can sway dangerously like a tree before a storm. But this isn't stopping traders, investors, economists, and market strategists from trying to make accurate predictions for the year ahead. It's that time of the year when researchers meddle with their algorithms and work on flows of forecasts that will accurately tell you where the S&P 500 will close next year, how high inflation rates will be, and so on. Nowadays, machine learning models have been applied to predict the stock price. It can be hard to predict because a large number of factors need to be considered. So the machine learning model that can take many inputs and assess the patterns would be ideal to accomplish this goal. The common machine learning techniques used for stock market prediction include linear regression, autoregressive integrated moving average family of techniques, support vector regression, and random forest. Facebook has also developed an open source advanced time series forecasting package called Profit, which is frequently used to predict stock price. In today's video, we'll explore the stock market and predicting the stock market prices using machine learning. As always, if you find this topic interesting, then you can let us know by hitting that like button and subscribing to this channel for more videos. You can also let us know if you find it interesting by saying so in the comments section down below. Now let's jump into it. So what is the stock market? A stock market is a public market where you can purchase and sell shares of companies and organizations listed publicly. Stocks are also known as equities, which represent ownership in the organization. The stock exchange is the intermediary through which you can purchase and sell stocks. The stock market's important because the stock market generates personal wealth, it helps companies and businesses to raise capital, they represent the state of the economy, and the stock markets enable people to invest in companies that are likely to grow in the future. Now let's look at stock market prediction. Predicting stocks and equity has always been difficult for statisticians and financial experts. The key reason for stock prediction is purchasing stocks that are likely to grow and then selling the ones that are likely to fall. Stock price prediction using machine learning helps investors find the future value of stocks and other financial assets. Predicting the performance of a stock is a challenging problem since there are different factors involved in the prediction, including physical and psychological factors, irrational and rational behavior, etc., etc. All these reasons work together to make stock prices dynamic and volatile. So to put it simply, it's difficult to forecast stock prices with the highest accuracy. Usually there are two different ways of predicting stock market prices. The first one is fundamental analysis, which relies on a company's technique and primary data such as annual growth rates, market position, and expenses. Technical analysis is the other one, which focuses on historical stock prices and values. This analysis uses charts of previous stock prices and patterns to predict prices. In the past, financial experts predicted the stock market prices. Nowadays, data scientists and researchers have started solving problems related to stock prediction with the progress of machine learning techniques. Computer scientists and researchers have begun using machine learning techniques to improve the performance of prediction models and also improving the accuracy. Implementing deep learning algorithms was the next stage in improving the performance and precision of prediction models. Predicting stock market prices comes with its own set of challenges, and data scientists are usually able to solve some of these while building a predictive model. It's evident that there are always uncertain factors like political scenarios in countries or the company's reputation that affect stock market trends. This is why if the data obtained from the stock market are thoroughly pre-processed and the right algorithms are implemented, the trend of stock values and indexes can be predicted. Machine learning and deep learning techniques can help investors and traders with their decisions. These approaches work to automatically identify and learn patterns among huge volumes of data. These algorithms can be self-learning and can handle the task of price fluctuations to improve trading strategies. Now let's look at deep learning for stock trading. There are different ways of designing a model powered by machine learning. This can be done through decision trees, linear regression, and k-nearest neighbors. In any case, given the difficulty and multifactorial dependencies of predicting stock market prices, deep learning is considered ideal. Long short-term memory, convolutional neural networks, and recurrent neural networks are some of the most commonly used deep learning models that outperform linear models. This is because they're based on neural networks, which are capable of transferring analyzed data into multi-layers. This makes the training and analytical processes much more efficient and easy than linear machine learning models. A neural network has different layers that studies and transfers data from one layer to another. And this includes an input layer, which in the case of stock market prediction would be previous data regarding stock prices of different organizations at a particular time period. There's also an output layer that predicts the future prices of stocks, and hidden layers, and each one can be a single linear algorithm such as linear regression. When it comes to stock market prediction, convolutional neural networks are implemented for pattern recognition and computer vision tasks. Recurrent neural networks come with feedback loops, making them ideal for time series problems. And long-term short-term memory is a type of recurrent neural network that's mostly employed for predicting stock prices as the crucial events with high weights are not regular. And there can be lags and uncertain duration between them. Predicting stock market prices accurately is a difficult task because of its volatile and nonlinear nature. However, with the advent of artificial intelligence, machine learning, and increased computational capabilities, prediction techniques have proved to be more efficient in predicting stock and equity prices. What is essential in analyzing each prediction is how investors perceive them. The stock market has undergone some crazy transformations, and the last 18 months have proven that. But time alleviates that insanity. So there we have it, a look at stock market prediction using machine learning. Once again, if you found this video interesting, don't forget to let us know by hitting that like button and subscribing to this channel for more videos. Thank you for watching.